Hi, welcome to the Price Action Analyst YouTube channel. Today I'm just going to show you here what ideal selling pressure looks like when you're looking to get short a stock. So this is Netflix. Just go across to the weekly chart just to give you an overview of what we're looking at. So this is a weekly chart. This is 2010-11 down this end. You can see that Netflix has been trending up for quite a while. You had quite a big run up there, and you have price consolidating in this pennant pattern. And then subsequently you got a breakout here. That's an April 13th. You get a retest of this trend line. So if you're short-term trading, that retest of this trend line is an ideal long. Boom, that's a decent option trade or futures trade or whatever. But I mean, that is more of a short-term trade. And this price action here, this retest and this wick on the weekly chart looks like, you know, Netflix might eventually proceed higher. But it's important when you're doing this to always keep in mind your time frame. So again, I mean, on the short term, breakout and a retest, that's an ideal option trade long there, and it worked. You've got a retest here, and you've got buying pressure on that retest, as is evidenced by that wick. So let's just go across to the daily chart. So here is that the trend line on that pennant pattern here, and we'll just zoom in. So you've got a breakout, and you would have expected weakness here. I mean, if you hit this short, you're going against the trend. So it's not ideal, but it's still possible. So what would I have looked for here? You've got strong price action up. You know it's not going to last forever. You've got price then proceeding outside of the Bollinger Band and leaving a wick. So I would be willing, you get price comes back and it generally will retest that area. I would be willing in a lot of the time to go short inside that wick. So how would you do that? You'd be buying a put options here. And you can see that worked over the course of, if you're buying in this wick, you know, you need, when you're buying options, the timing needs to be spot on. So for me, to get that timing right, I would buy a put option in that wick. And you can see even as soon as price was in that wick, it was based, the next day it was on its way. So that's fine in terms of an options trade. So, you know, 1, 2, 3, 4, 5, 6, 7 days there of generally downward price action there, you would have made money on a put option and been able to get out. That's not where I got involved though. I saw this, I watched it retrace. Here's the retrace back to that trend line. So again, I'd hit that long with a call option. So if you shorted this with a put option, you should be keeping an eye. You have to be watching the market when you get that retest of the trend line. And if you get any strength there, you've got to be exiting that put option position. And you're exiting where you would ideally go long with a call option, which happened right here. So on that retest, you know, you'd be watching on the daily chart, and your bars might be 5 or 10 minutes or 3 minutes long, but any strength around that area, you'd be looking to go long. And you can see that this worked again. You had, you know, there was a lot of volume or increase in volume here, and this long worked. But for me, I'm watching again when price comes into this area where there's stuck longs, where there was selling pressure off there. I'm watching to see what happens. So I'm actually in this trade right now with a put debit spread. That means that I'm buying this put. It's be a 440 put, and then I sold a 435 put. So what I was looking for as price came up into this area is, I think I entered it here. No, it was here because it went against me a little bit. But let's just draw this up here. So this triangle is based on this wick. So as price comes back up into this wick, I'm looking for selling pressure, and I think I decided to get short when that day that price action made that wick, because it was close to the Bollinger Band. It was either that day or that day, but the premise is the same. That wick means that the selling pressure is there again, and I'll short the retest of this initial sell down in price. So I think I shorted somewhere around there, and you can see price went against me a bit. And what it did was it left another wick here, and then it actually washed that pivot. So, anywhere around here was ideal. That put debit spread ideally could have been like a 450 and a 445 would have been better. But you got a wash of the pivot, and then you've got selling pressure here. And those debit spreads, like, it's not, if this had been a naked put, I would have made more money here. I do a put debit spread because it costs less to get into. The downside is price has to run quite a long way for you to get close to the maximum upside in that spread. So the spread cost me around 250, and the maximum upside is 500. The maximum total is 500, so the upside is about 250. But the price action's here, and the debit spread's worth about 320, and I paid 250. So I just need price to either proceed down or hang around here for a bit longer. But you can see this trade and my premise worked. I'm expecting weakness here, and you got weakness, and as soon as it washed that previous pivot, that previous high, you got all the selling pressure again. And so I just want to talk about what's happening now. You've got strong downward momentum, and then this upside momentum is not as strong. And I was kind of hoping that it would roll over here, and as you can see, price has started to roll over. So while I'm in this option trade, these are the things I'm watching, because when price is going to retest this wick here, you're going to see buying pressure again. Just like you had this short here, people were short, and then you had all this buying pressure step in. When price retests that low, look what happens. You get all the buyers step back in. So you got a bit of strength here. It's rolling over. So I'm watching now my new area that I'm watching, I guess. Let me just frame this up. So I'm very interested to see what happens to price here. So when price comes into this rectangle, into this wick, I will be looking at the intraday chart, which I'll flick to in a minute, to watch price action. If it starts to show like strength here, a lot of strength, then I'll probably look to exit that debit spread. Also, if price is to push down here, as soon as it washes that, when you've got two previous lows like this, price could just jut between the two of them, and then you'll get strength there as well. So it's actually a higher probability that price will come down here and show some sort of strength, as opposed to just punching through. It never really tends to do that. It's only in extreme examples like the COVID thing where you have previous lows and price just rockets through it. It tends to be some sort of extreme event. Generally, price will come up to the low, come down, test the previous lows, go up, wash those previous highs, come up. It's sort of more, I don't know what the word I'm looking for is. It's more consistent in its price action generally. So, I think where the market, at least in the short term, is getting back to that sort of normality. And so I expect price to come down here, and I expect to see strength here. So I'm watching that. If there's too much strength, I might just exit that position and take the profit while I can. At the same time, what I'm hoping is that price, it pushes down here far enough for me to hit my exit target on on that put debit spread. So the maximum that I paid 250 to get into that, the maximum that could be worth. So if price is underneath at expiry, the maximum that's worth is 500, and I've got a trade sitting there to exit at 450. So, you know, if price can push down enough to exit me out of that trade, that's wonderful. But if I see, you know, too much strength there, or strength that I don't like, then I'm probably going to look to just exit the trade. So again, I just wanted to share that with you, because in future videos where I say I'm looking for weakness, so again, if I have this previous high, when price comes up to test or wash that, I'm looking to see weakness, and that wick right there is ideal. Like as soon as I see that, I'm no longer, like I'm not going long on the stock. I'm looking for short. So, you know, you get a little bit of back, you get the retest of that wick, that selling pressure, and bang, there's your short for an option trade. At the same time, when you get that upward momentum, price will come and retrace about 50%, which it did here, and also it was retesting this trend line, and there was your long trade. These are short-term trades. Again, as price approaches that previous high where the selling pressure was, look what happened. You got weakness, you got a wash, and then you get your selling pressure. So that's what I was expecting. I was just a little bit early. Now we've had weakness, and we've got, you know, the upward momentum is less strong than the downward momentum, and you've got price rolling over again. So that's good so far. I'm just going to flick to the intraday. Just go to 5-minute bars. Let's go to 10 days. So, you know, there's my rectangle. There's a previous low there. You can see the previous low, wash. You get a bit of strength. Price rolls back over. Here's your previous lows here. You got a bit of strength. But with this downward momentum, I'm expecting price to roll over. Maybe, hopefully, it'll gap down tomorrow, or, you know, gap up and roll over. But when price enters this rectangle, like especially, you know, around here and where there's air here and air here, as price comes down and meets that air, you're gonna see buying pressure again. So it just depends. I might do another video if price gets down there and just show how I managed this trade. I mean, it'll be nice if price just rockets down here below, but that is low probability. What's high probability is you're going to see strength here, and if the strength starts to get stronger and stronger as we go down, or washes this pivot and you see like lots of strength, I'm probably going to just exit the position. Let me just go back to the candlesticks. So again, I'm just showing you that video, so when I talk about, you know, when I'm looking for weakness at previous highs, that's kind of textbook of what I'm looking for. And now that I'm in that trade, I might just make this video and then do an update of how I managed that after it went my way. Thanks for watching.